being 193, TDS from interest on securities, and 194A, other than securities interest, if any, paid. What are all the TDS procedures to be followed? We would be discussing. Hope I am audible. You're all listening to me. Can I?
Yes.
Yes.
Yes, sir.
Okay. Okay.
Yes, sir.
So kindly do raise your queries when and where required. The TDS provisions, two sections, which are practically applicable in most of our situations. So two sections we are going to discuss, for which I am trying to share my PowerPoint presentation. Hope it is visible. Deduction of tax at source from interest on security. Is it visible?
Yes.
Yes,
sir.
sir.
Yes.
Yes, sir.
Yes.
So section 193 we are going to discuss. So what does, or those two sections that we are going to discuss, 193 with that of 194A. So first of all, we should know the basic difference between these interest paid under section 193 for TDS to be deducted on interest under section 193 with that of 194A. The fundamental and basic difference between 193 and 194A, 193 deals with interest on securities. Securities meaning debentures, bonds, all sorts of securities, if any issued by an organization. On such securities, if any interest are being paid, on such interest paid other than to a non-resident. So for sure, if you are making the payment of interest to a non-resident, my dear learned friends, it is not 193 or 194A which would be applicable. In both cases, if you are paying only to a resident, then only these sections would be applicable. If you are paying to a non-resident, then section 195 would be applicable. So at the time of going through all these TDS sections, not only with regarding to this 193 nor 194A, but if you are going through any other sort of TDS sections, all those sections you have to verify to whom it is applicable. In almost all cases, you may see, except some exceptions, you may see it is not applicable to non-residents. Section 195 would be applicable. Higher rate of TDS will be applicable on such cases. So fundamentally, from whom the TDS has to be deducted, or while making payment to whom TDS has to be deducted, basic understanding you should have. So under both situations, the two sections that we are going to discuss today, 193 as well as 194A, if you are making that interest payment to a non-resident, these sections would not be applicable. Section 195 would be applicable. First point of understanding. Then in both cases, interest is being paid. What is interest and all, we would be discussing later. And the fundamental distinction between these two sections being, under 193, I was mentioning, if you are making payment in form of interest on various securities I was mentioning, bonds, debentures, etc. On such interest only 193 would be applicable. Other than those securities, if you are making payments, say you are making payment to, you are a banking company, you are making payment to your depositors in form of interest, then it is not a security. Deposit, it cannot be terminated to be as a security. On such deposits, yes, 194A would be applicable. Then, in case wherein you are making interest on loans, loan cannot be per se termed to be as a security. So if you are making interest payment on various loans. On such interest, 194A would be applicable. So in all these cases, other than those of interest paid on securities as specifically covered under 193, 194A would be applicable. So with distincting those two sections, first of all, I am entering on to first section, section number 193, TDS on interest on securities. Hope I am clear. Before on to the session itself, I was trying to distinct those two sections, my dear friends. First section being 193, second section being 194A. The basic distinction between those two sections and common features among those two I am discussing. Hope it was appreciated. You got those distinctions as well as similarities between those two sections. Can I hope so?
Yes, sir.
Yes, sir.
Sure. Yes. So first section 193, scope and application of section 193. Section 193 provides that where any person, so person who is making the payment, there is no distinction. May it be a resident,
Not audible, sir.
Sir, your microphone was muted, sir. Hello, sir. Your microphone was muted, sir.
I haven't. Is it now audible? Hello?
Yes, sir.
Yes, sir.
Yes, sir. Yes, sir.
So for how much time it was muted? Only for the last couple of minutes.
Yes,
Yeah,
sir.
start of this.
Okay.
From the
Okay.
starting of this section. Yeah.
So section 193. I don't know whether anyone among the participants can mute me. I haven't. Kindly don't attempt it. Why? Because I am not having that view of this basic window. Only that PPT would be visible to me. So I cannot verify whether I am audible or not. If in case I am not audible, kindly do let me know. Otherwise, I cannot. Okay.
Sure, sir.
Okay. So now section 193. Section 193 provides that where any person. So here any person meaning what? Irrespective of whether they are resident or non-resident. I am telling about deductor. There are two persons as we know. The person who deducts, who makes the payment, payer is the deductor here. The person who receives the amount is the recipient, deductee here. Payee would be the deductee. So the deductee shouldn't be a non-resident. I was mentioning a deductor, the person who makes interest payment can be a resident, can also be a non-resident, can be an individual, can be a company, artificial juridical person, local authority, any person. So any person who is making interest on securities payment shall be obliged to deduct TDS under section 193. So the basic instinct from this point is irrespective of the personal status, irrespective of residential status, the person making payment shall deduct TDS under section 193 by way of interest on securities to the payee. The tax will have to be deducted at source. The payments to non-residents will be subject to tax deduction under section 195. That provision I was mentioning. If such person who is receiving the security, if they are non-residents, then 195 would be applicable. It would be 30%, 40% and all for companies and non-companies. So therein, if only the deductee is a resident, then this section would be applicable. So three things from this basic slide. Any person who is making payment. So therein, there is no distinction between resident, non-resident type of personal statuses and all. But if only if they are making payment to a resident, if they are making interest on securities. Securities I was mentioning what are all would be comprising of securities. The term interest also being defined under this section. So we would be discussing that section. The term interest again. Anyhow, if you are making that payment interest on such securities, then this section would be applicable. Bus. Then what payments are covered by section 193? The payments which fulfill the following conditions are covered. Payments are in nature of interest on securities, not the interest alone. Why? Because other than that of securities, I was mentioning our second section of the day, 194A would be applicable. Then such interest is not exempt from tax by virtue of proviso to 193. So in this section 193, there are a lot of sections. There are a lot of securities which are being exempted for deducting under section 193 are being mentioned. So under that proviso, that interest should not have been accrued, then it is exempted under section 193. Then what is interest on security? I was mentioning the term securities has reference to written instrument. Such an instrument are usually for the payment of money or to evidence a debt. They are more than mere promise of debtor to pay the liability and have as collateral to such instruments pledges of property or some additional obligation. That's what the term security is. So I was mentioning it's an obligation, not only an obligation, rather it's an instrument in writing which has been done, evidencing a debt. Such thing pledges some property or something with some other additional obligation. So such sort of bonds, debentures, etc. would be termed as securities. Then I was mentioning proviso to 193 specifically exempts some of those securities on which interest when paid to them, section 193 would not be applicable. So these are termed to be exempt securities under section 193. So which are all those sections? Which are all those exempted securities? The list being 4.25% National Defence Bond 1972, 4.75% National Defence Loan 1972, National Development Bonds, 5-year NSC National Savings Certificate, debenture issued by a company in which public are substantially interested, provided amount of interest or the case may be aggregate amount of such interest or likely to be paid on such debenture doesn't exceed 5,000 and such interest is paid by company by an account payee check. So subject to these two conditions, the amount of interest is less than 5,000 and the interest is paid via account payee check. Now account payee check is par equal to NEFT, RTGS, IMPBS, etc. So non-cash. That's it. So if such amounts are being paid, account payee, IMPBS, RTGS, etc., and such amount is less than 5,000. So in such cases, in public company gives interest on debentures, then it is also exempted. But there were no such specific conditions in case of NSC, National Development Bond, National Defence Loan, National Defence Bond, etc. Here, when the interest is paid by a public company and the total interest year to a person is less than 5,000 and such interest has to be paid in non-cash mode I was mentioning. So this is another exemption, exempted security. Then any interest payable by Life Insurance Corporation, General Insurance Corporation for companies formed under General Insurance Companies Act, any other insurer in respect of securities owned by it or in which it has beneficial interest. So any interest paid by such insurance companies are also exempted under section 193. Then the expression owner of securities in occurring section 199 would include beneficial owner also. So we know the difference between the real owner with that of beneficial owner in case of demat of securities and all. So in order to get into the actual person, beneficiary is a person who will be obliged to get deducted by this TDS. Where government securities are registered in the name of banking company, then the tax will be deducted from source from interest at the rate in force applicable to the banking company without regard to the status of beneficial owner. So there is no distinction between government with that of non-government. Then interest on 8% saving taxable bond. So these are all the various securities which are said to have been exempted in nature. So apart from which, if you are making payment to these securities, then this section 193 would be applicable. So as a second point I was mentioning, what is a security, what is interest, we would be discussing later anyhow. So on those securities, which are all those securities on which tax is not deductible, I was mentioning the list. Hope you went through the list. This material also would be shared. So kindly do go through the exempted list. Then the critical point is, apart from those specific exemptions, one among the exemption with two other conditions. Less than 5,000, amount paid via account payee check. Then if such interest is paid by a public company in form of interest on debentures, it would be also an exempted security. Then who is responsible to deduct TDS? In case of interest on security payable by central or state government, appropriate disbursement officers is responsible for paying the interest on securities. So I was mentioning, irrespective of whether it is being paid by government or by non-government deductor, the amount is said to have been deducted. Government, we know there would be some responsible officers, principal drawing officers and all. Those persons in case of government deductors would be responsible to do it. Then other than by government, the person responsible for paying interest, then that principal officer or the director would be able to deduct the same. Then when the payment is made to government, where the recipient of payment is to any persons, no tax shall be deductible at source. So the deductor, irrespective of whether it is government or non-government, then the deduction has to be made. But in case wherein the recipient is the following persons, then also this exemption under section 193 is there. So second set of exemptions, my dear friends, we are trying to discuss now. First set of exemptions on the basis of securities we were mentioning, and this many securities were there. Hope you recollect. After discussing the security based exemption, now we are trying to figure out those exemptions in case wherein the recipient based exemptions are there. So no tax deduction for following persons. So if such interest is being received by central government, state government, Reserve Bank of India, Unit Trust of India, LIC, GIC and its subsidiaries, and any other insurance in respect of insecurities owned by them or in they have the full beneficial interest. In such cases, this section would not be applicable. So hope you understand. First set we were mentioning about various securities under which the exemption is there. Now set of deductees, recipients. If such interest is being paid to these persons, then also this section is not applicable. Hope you are clear. Can I?
Yes.
Yes, sir.
Yes, sir.
Now, apart from this list, corporation established under central acts, mutual funds. So all these persons, 7 persons, if they are getting paid, then there is an exemption under this section 193. Tax need not be deducted. So when the tax to be collected, so we know in each and every section under TDS, the collection point is being mentioned. Here it is as usual in almost so many cases, the tax has to be deducted at the time of payment or at the time of credit, whichever is earlier. So at the time wherein it has been entered in the books or time wherein actual payment of interest is being made, whichever is earlier, we would be required to deduct TDS under section 193. Then we know there can be certain situations wherein the recipient is not identifiable or the amount cannot be paid to the bank account which is being mentioned or inactive due to various reasons. On those situations, if the recipient is not identifiable, then the amount would be credited to a suspense account. Then when it gets cleared, it would be again given to the person actually who has deposited. So herein, if such amount is being credited to interest suspense account, then whether TDS is applicable, the answer is yes. If any interest is being given for those provisions under that interest on security suspense also, this section would be applicable. Then there are situations not only related to 193, section 197, section 197, section 197 discussing about various situations under which the tax need not be deducted or tax may be deducted at lower rate. So in this section 193, we were discussing two types of exemptions. One, exemption relating to nature of security, exemption related to the person who is receiving, the recipient based exemption. This three or third set of exemption, this is not only applicable to this section, but almost all other TDS section. These exemptions under 197 would be applicable. So which are all those situations which are mentioned here? So I will tell you, my dear friends, you may have definitely heard about two forms, at least in banks and all. Form 15G and Form 15H. Have you ever heard these two forms, 15G, 15H?
Yes.
Yes, sir.
Yes. So can anyone kindly do tell me what is 15G, 15H? What is the fundamental difference between G and H? Hello.
H for senior citizen.
Yes, madam, you are. H for senior citizen, G for other
And
than
G
seniors.
for non.
And G for other
Non-seniors, other than
than
senior
senior
citizens,
citizen.
then this would be applicable. So the point is 15G and 15H. What is the basic purpose? Distinction
Not to
G and H I was
deduct
mentioning.
Non-deduction of TDS.
Non-deduction of TDS subject to
on
certain
fixed
conditions,
deposit.
isn't it? So hope you had gone through that form 15G, 15H. So basically, when this 16G and 15H would be given, 15G and 15H would be given instructing the bank not to deduct the TDS. For the reason that the total income, including such interest from such interest providers, if such interest plus any other income taxable, the total income is less than basic exemption limit, then the deductee in form 15G or 15H can give the instruction to the deductor not to deduct the same, So by not deducting the same, the deductor, after receiving this 15G and 15H, if they are not deducting, then the non-compliance sort of penalties, disallowances, prosecution, etc. would not be there on the deductor. The deductor would be getting safe even though it is not deducted. Why? Because he is following that 15G, 15H compliance procedure under section 197. So first exemption, 15G, 15H. In this case of 193 as well as 194A, 15G, 15H options are there, but need not be in all other remaining TDS sections. So apart from this 193 and 194A, in all other sections, if the TDS has to be deducted at lower rate or TDS not to be deducted, then the assessee have got another option in order to approach the assessing officer under section 197 of the Act. Which is the section, my dear friends? Section
7.
197. 197. So that 197 section, the assessing officer is being approached, and in that application, if the assessing officer is also satisfied, then order under section 197 would be issued to the deductor for non-deduction or short deduction of TDS. By receiving the same, also the deductor need not or can deduct at the rate which is being prescribed under section 197. Then again, he would not be an assessee in default for non-deduction or short deduction. These are all the instances wherein which another exemption for deduction is there: 15G, 15H, 197 route, etc. So I was mentioning you have to approach the assessing officer in order to get that 197. The form would be in form number 1313. So in that form, just as 15G, 15H, the total income including excluding such incomes, the total tax, etc. would be given there. Then after getting that application, assessing officer would issue that certificate under section 197. So how the lower rate and nil rate is determined? On that basis of that form in 13 submitted, the total tax payable would be estimated. Then the last 3 years returns would be evaluated. Existing liability, advance tax payment, everything would be done. On that basis, this would be issued by the officer, and after receiving the same, definitely yes, the deductor need not deduct the TDS. These are the third line of exemptions I was mentioning for this section. First section on the basis of various securities. Second section on the basis of various recipients. Third one, 197 road, 15G, 15H as well as application to the assessing officer. Now, after deducting the TDS, we know the person who is deducting, definitely yes, they should have TAN. Now it is TDAN and TCAN and all. Tax deductors account number, tax collectors account number and all. TDCAN sort of concept is also there at the time of incorporation of company in SPICE form. Anyhow, the point being, after deducting it, we know the amount has to be paid within 7th of next month, except for the month of March, April 30th. Then for government deductors who are doing book entry, same day they have to make the payment. And after making the payment, they would be required to submit the TDS return also. So at the time of submitting TDS return, the form which would be applicable for this section would be form in 26Q. 26Q, definitely yes. In order to get the person who has deducted the credit, they have to give the PAN. If PAN or Aadhaar is not given, then 206 WA would be applicable. Higher rate of TDS would be deducted from those deductees. So this is what about the basic section, the first section, section 193. Hope I was clear about this section 193. Any doubt in this section 193? Definitely you may ask. If no doubts, let us move on to the next section, section 194A. Shall we?
Yes, sir.
So nothing here. Some basics I was mentioning. The remaining portions we would be discussing after discussing 194A also. So 193, interest on securities paid to residents, exemptions and all we were discussing. Now on to section 194A. 194A, interest other than interest on securities. So other than those securities as mentioned in section 193, the remaining interest paid would be attracted under this section 194A. So under section 194A, any of the specified person is liable to deduct at source if such person makes the payment of income by way of interest other than interest on security to any resident person. So two differences between 193 with that of 194A. First difference I was mentioning earlier. There it is interest on securities securities interest other than from those of securities. First thing. Second thing, if you note, there any person who is making payment in form of interest on securities were bound to deduct the TDS. Whereas under this section, if you may note, the point being any of the specified person, then only this section would be applicable. Then what is the relevance of this specified person? Specified person, if you see, the specified person are any person other than individual or HUF. So who are the specified persons? So the fundamental distinction I was mentioning 193, 194A. First one regarding interest on security other than interest on securities. Then the second distinction there, any person who is responsible to make the interest payment, here the specified person. So who is specified person? Any person other than individual or HUF shall be a specified person. Then individual and HUF would be a specified person only if in case of a business person, their total business turnover is more than 1 crore, and in case of professional, their professional receipts is more than 50 lakh during the immediately preceding financial year. Then only such persons would be applicable to deduct the TDS. So in case wherein the person who is making this interest under section 194A, if such persons are individuals or HUF, then such individuals or HUF shall be obliged to deduct the TDS if only their total amount of previous year turnover in form of business is more than 1 crore, in form of professional receipts is more than 50 lakhs. So this is what you meant by the term specified person, specified person, specified person. Hope I am clear. Can I? So in short, an individual or HUF would be required to deduct TDS under this section 194A only if their turnover, in case of business is more than 1 crore, in case of professional is more than 50 lakh rupees. So a non-business categorized person, a person who is not doing any business, a person who is not engaged in any profession, making any interest other than that of security, then this section 194A would not be applicable. Then business persons, professional persons, individuals HUF, then again this would be applicable only if their turnover is more than prescribed limit of 1 crore and 50 lakh. So other than individual HUF, in case of firm, company, etc., no such turnover limits, everyone would be obliged to deduct TDS under this section 194A. Hope I am clear. Can I? Hello?
Yes, sir.
Sir,
So,
can
so-
you repeat again?
Which one, Sandeep sir?
The last point which you.
The last point, sir, I was mentioning. The persons in a passive form, I would be telling you, and in an active form, I would be telling you. The point is, who are the persons not required to deduct TDS under section 194A? In that sense, individual or HUF is not required to deduct the TDS under section 194A. This is deductor's perspective, not recipient's perspective, deductor's perspective. If I am an individual, I am making some interest payment. And if my business turnover during the last year is less than 1 crore, if I am a professional, if my last year professional receipt is less than 50 lakh, if I am not a businessman, I am not a professional, then turnover doesn't count. It is less than 1 crore and 50 lakh too. Then all in such cases, if I am making interest payment to someone, then I am not obliged to deduct the TDS under section 194A. Is it clear, Sandeep sir?
It's clear, sir.
Okay. So deductor's perspective. Kindly don't mistake it to be deductee. It's deductor. Deductor's perspective I am talking about. Then, so two differences between 193 and 194A. Now we have discussed. Anyone, can you tell me those two differences? Hello? Anyone, please? Two differences.
Sir, in
Just
case
to
of section 1,
yes,
sir, in
continue,
case of
please.
section 193, it is on interest on securities, whereas in case of section 194A, it is on interest other than interest on securities, the TDS has to be deducted. And in case of
Okay.
section 193, any person making the payment of interest will be deducting the tax. But in case of section 194A, only specified persons making the payment of interest other than interest on securities will be deducting TDS.
Okay, very good. So this is what the basic distinction between those two sections. Then, so a specified person I was mentioning, who are all the specified person we were discussing. So that person would be liable to deduct TDS at source if making any income, payment of income by way of interest other than interest on security to any resident person. So in both cases, when only the person who is receiving is a resident person, these sections would be applicable. Then what is interest? Securities definition we were discussing earlier. Now on to the second term, interest. What is interest? Interest means return for use of one person of a sum belonging to another person. So another person sum you are utilizing, in turn you are giving something in return. Where such payment of interest is in kind, the tax would be deducted at source. So in case wherein interest is being paid either in kind or in cash, both cases, this TDS has to be deducted. So what is this interest paid in kind and how the TDS would be deducted? In such cases, in case of lotteries and all, lottery winning, you may be receiving, or gambling winning, you may be receiving something in kind. In such cases also TDS is applicable. So in such cases wherein you are not making any monetary payment. In case of monetary payment, you can easily deduct some amount from the same and the residual amount can be paid so that TDS provisions can be complied. But if you are making some non-monetary payment, say car is being given, car. So from that a non-monetary thing, a car value 10 lakh, suppose, and 30% is the TDS, then that 3 lakh rupees would be collected from the person who has won it, or voluntarily the deductor have to pay it from their pockets. This is how in case of non-monetary payments, generally the TDS would be complied with. So in this case also, whether it is monetary or non-monetary, the section would be applicable. Interest means interest payable in manner of any respect of any main money borrowed or debt incurred, and includes any service fee or other charges in respect of money borrowed or debt incurred, or in respect of any credit facility which has not been utilized. Hence, the interest include interest on loan, debt, claim, etc. So apart from those securities, any sort of interest would be collected or would be deducted here. This is what about the term interest is. Then the persons who are specified person already, yes, we have defined, we have mentioned those persons. No tax shall be deducted at source during the financial year if such interest payable by the payer to payee doesn't exceed 5,000. So 5,000 is the basic limit. If only that amount is more than 5,000, there are some certain other exceptions also. Anyhow, for the time being, 5,000 is the basic limit. Therefore, if any partnership, firm, LLP, company, AOP, society pays interest exceeding threshold limit, it is required to deduct TDS. So there, individual or HUF only is having that exemption regarding their previous turnover. Other than individual HUF, if they are paying TDS irrespective of their basic previous year turnover, they would be required to deduct the TDS. Then, what are all the threshold limit other than 5,000? You may see banking company. Then in such cases, it is 40,000. Cooperative society, 40,000. Cooperative whose turnover exceeds 50 crore, 40,000. Post office, 40,000. But in case wherein the person who is receiving is a senior citizen, instead of 40,000, the limit would be 50,000. So in short, if the depositor is 45 years, then the threshold limit shall be 40,000. If such
40,000.
bank pays interest more than 40,000, then TDS would be required to be deducted. But if you are a senior citizen depositor, then the bank would deduct the TDS only if the amount is more than 50,000 rupees. 50,000 rupees. Apart from this banking company, cooperative society, post office and all, any other person, if you are making the interest, then 5,000 rupees is the threshold limit. 5,000 rupees is the threshold limit. 5,000 rupees is the threshold limit. Now my simple gentle question to you all. If you are paying interest on loan, then whether TDS would be applicable. Hello?
If it is with bank, we know TDS is not applicable, but if it is with third party, TDS is applicable.
What are all the situations you are in other than bank if you are making the payment? Meaning what? Can you tell me the avenues, madam? Other than bank, when you would be making the payment?
Loan taken from third party, I mean like individuals or private finance companies, then you have to deduct TDS.
Okay, brilliant. As she rightly mentioned, if you are making the payment of interest in form of interest to bank, then this section would not be applicable. But if you are making the interest payment to private finances, say vehicle loan providers, NBFCs, non-banking financial companies and all, they are all non-banking companies. So in such cases, other than the interest paid to non-bank, then if such interest is being paid not in form of security, then this section 194A would be applicable. So this point, critical. Kindly do note it down. If you are making the payment in form of interest to private financiers, you know, a lot of vehicle loan providers, Mahindra vehicle loan, Cholamandalam Finance, all those different types of players are there. So if an entity is making payment to such persons, then even though it is loan interest, on such interest, you are obliged to deduct TDS under section 194A. But rather, if you have availed such loan from banking companies, State Bank of India, Bank of Baroda, on such interest, this deduction under section 194A is not applicable. So kindly do make it down. Quite an important point. So this is what about the threshold limit. Then when the TDS to be deducted, same, the amount paid, the time of payment or the time of credit, whichever is earlier, then challan has to be paid within 7 days from the next month. 15G, 15H already I was mentioning. Form 13 also I was mentioning. Then the section 228A defines the term interest. So all these things. Now about the rate of TDS. I would tell you the rate of TDS under section 193. If you are making the payment, to companies, 193, it would be 20%. If you are making the payment to non-companies, then it would be 10% the TDS. That is what about 193 is. So again, do I repeat? Section 193, two rates. If you are making the payment to a company person, recipient is a company, the rate shall be 20%. Other than companies, it would be 10%. Then in case of 194A, the rate of TDS would be 10%. In both cases, the recipients are residents only. In such cases, surcharge and cess would not be applicable. So that point also kindly do kindly do make it down. If the interest or any other sort of payment is made to non-residents, then only additional surcharge and cess would be applicable on the cases. Otherwise, these two surcharges as well as the cesses would not be applicable. So on both sections 193 as well as 194A, surcharges and cesses are not applicable. But in cases wherein if you are making the payment to non-residents, I was mentioning section 194Q would be applicable. So sorry, 195 would be applicable. 195 would be applicable. And in such case wherein you are making the payment under section 195, 30%, 40% sort of rates would be applicable. So here 193, 194A, I was discussing about the rate of TDS. Hope you are all clear. I need not repeat it again. Whether I have to 193, 20%, 10%, 194A, 10%. Is it clear, sirs, madam?
Yes, sir. Clear.
Yes.
Yes, sir.
Yes, sir.
Now, one question, whether a partnership firm is liable to deduct tax on such sum paid as interest on loan borrowed from Indian branch of a foreign bank. So if you are making the amount to a foreign bank is a non-resident. So whether the TDS has to be deducted, case law says is not required to deduct the TDS. Now another sub question to you, not in slide. You know, in case of partnerships, the partners would be paid interest on loans, isn't it? Hello?
Yes, sir.
Interest on capital and all
Yes.
would be given. Not on loans, interest on capital would be given, isn't it?
Yes.
So on such interest on capital, whether TDS has to be deducted. Interest on capital, whether TDS has to be deducted.
No,
You know,
sir.
under section 40B,
No, I
40B.
think no, sir.
Why, madam? Any reason?
The interest of will be taxed on the individual, and so it will be taxed in the partners. Up to 12% is not taxed, right? I mean, like up to 12%, you can claim it as an expense, interest on partner's capital. Beyond that percentage, it will be taxable, but it will be taxable in the individual hands.
Okay, I do agree with all these things. This is section 40B. This is with regarding the allowability of deduction. 12% up to it can be deductible expense. Above 12%, if the deed also accepting, then above 12% it would be taxed in firm's hand, disallowed. All those things keeping apart. What I am asking is on such payment, interest being paid by firm, whether TDS has to be deducted.
No.
No. What is the reason? Whether on such remuneration payable to partners 192 was applicable. I do hope you covered 192. Can I? 192 already covered, no?
Yes, sir.
So under 192, if you are making payment of remuneration to partners, salary to partners, whether 192 was applicable?
No, sir.
No. So again, if you are making interest paid to partners on capital, whether 194A is applicable? Again, no, it is.
No.
My question is why under both sections it was not applicable? Okay, I will tell you the reason. 192, you know, the employer-employee relationship, then section salary 192 would be applicable. So thereby the remuneration or salary received would be taxed under PGBP head as far as partner is concerned. Thereby there is no employer-employee relationship between partnership with that of partner. Thereby 192 was not applicable. Even though it is taxable under PGBP, why this section is not applicable if you ask? The point is there are several decisions on the basis wherein this remuneration and this interest would be termed as appropriation of profit and not as what? The normal amounts. So there is no distinction between partnership with that of partnership firm, and thereby on such interest paid to partners, this section 194A is not at all applicable. So that is the logic. The logic being there is no distinction between partner with that of partnership. Then it is not the interest paid. It's the name is being interest. It is nothing but an appropriation of profit. For that reason, this amount 194A would not be applicable on such payment in form of interest on capital. Hope I am clear. Can I?
Yes, sir.
Okay.
Yes, sir.
In both cases, yes, 192 as well as 194A is not applicable for such payments made to partners. Then now, you may be knowing, not by deducting TDS, lot of consequences would be there. And can anybody tell me the consequences for not deducting TDS? First consequence. Hello. Non-deduction of TDS, the consequences. The first consequence I would tell you. Hope you're listening to me. Can I?
Yeah, sir. Yeah.
Yes, sir.
First consequence, disallowance. These are all not in the slide. Just I am discussing. Why? Because these are all not directly relating to these two sections. So I haven't mentioned it in the PPT, but you are all hope you are all listening to me. The first consequence, disallowance of expenses, my dear friends. What it is? Disallowances. So what do you mean by the term disallowances? Under PGVP, there are two sections. 40A, 1A. 48 deals with if you are making the payment to a non-resident, if the payment is deductible under any of those TDS and you have not deducted the TDS, then 100% of such amount shall be said to have inadmitted. So that amount of payment you cannot treat it to be as an expenses. But if you are making the payment to a resident, then if you are making such payment within India, then instead of 100% being disallowed, only 30% of such amount would be disallowed. So this is the consequence number 1. Suppose if you are making any payment, not only this section 194A or 193, any section if you are having deducted and such person is a non-resident, or if you are making such payment outside India, then entire amount shall be held to be disallowed. Point number 1. Over and above, if you are making such payment to a resident, and if you are making such payment within India, instead of 100% being disallowed, 30% would be disallowed. So what does it mean? Say you are paying an interest in form of 194A. And I was mentioning in case wherein you are making payment of interest to private financiers and all, then TDS has to be deducted if the payment is more than 5,000. 10% is required to be deducted. So in such cases, if you are not making such a deduction, then for the reason the receiver is a resident and you are making the payment within India, suppose you are making 1 lakh to be as interest payment. 1 lakh to be as interest payment. Out of that 1 lakh, 30,000 rupees would be disallowed. How much would be disallowed? Hello?
30,000.
30%. I do hope you understand the term disallowance. Can I?
Yes, sir.
Yes, sir.
Disallowance meaning that amount would not be treated as an expense. If you have debited the entire amount of 1 lakh in P&L account at the time of income tax computation, 30,000 would be added back.
You will
Hope I
have
am
to add
clear.
it back.
Yes. In case wherein if you are making such payment to a non-resident, instead of 30%, it should have been 100% of such amount. So if you are making interest payment, not under the section 194A, say 195, you haven't deducted, then 1 lakh rupees paid outside India or to paid to a non-resident, then 100% of 1 lakh, 1 lakh rupees would be treated as disallowed expenses. Hope I am clear.
Disallowance.
Can I?
Yes, sir.
Yes.
Yes, sir.
First consequence. First consequence. First consequence. The next point is than that of this disallowance, there can be chances that there would be penalties, 221 penalty, 271 penalty, etc. also would be there. Apart from these penalties, there is also a chance that there can be prosecution not less than 3 months, not more than 7 years with fine. That way also non-deduction or short deduction, you would have the consequences. Then for non-deduction and non-payment, there can be or what do you call it? You haven't paid the tax on timely basis. You haven't submitted the returns on timely basis. For those non-compliances also, interest would be there. Interest would be there for delayed payment. For delayed submission of returns, late fee per day 200 would be there. Plus for non-submission of returns, delayed submission of returns, penalty also would be there. So these are all the basic consequences. Basic consequences. If you have not complied with these provisions under TDS, basically it can be classified into 3. First one I was mentioning, disallowability of expenses, resident within India 30%, outside India to non-resident 100%. This is the first consequence. Next consequence, penalty. Apart from these disallowances, scope for penalties are there. Scope for prosecution also is there. Second one. Third one, for non-payment of tax within time. After deducting or not deducting, you haven't made the payment, delayed payment of tax in challan, interest would be there, plus non-submission or delayed submission of returns, late fee per day 200 plus penalty also would be there. These are all the non-consequences if you have not done this deduction, if you have not done the deduction as per the appropriate rates. Then apart from this normal rates of taxes, so 2 rates of taxes I was mentioning for 193. Can anyone recall back the rates of taxes under 193, please?
20% in case of company and 10% other than that.
Okay, brilliant. 194A. Any other rate? The rate of tax I was mentioning was
10%.
10%. 10%. Now, peacefully listen to me. Apart from these normal rates, there are 2 other sections in case of TDS, 1 more section in case of TCS dealing with higher rate of TDS and TCS. Now we are discussing about TDS 2 sections. So one section regarding TDS I am trying to mention. Section 206AB. What is the section? Hello?
206.
206AB. Corresponding section 206CCA. What is the corresponding section?
206 double C.
206CCA is the corresponding section in case of TCS. So what is that much relevance about these 2 sections? If you go by, instead of the normal rate of TDS, if you are having the payment to be made to specified persons under these 2 sections, then instead of normal rate of TDS, you would be required to deduct the TDS at higher rate. higher
Higher
rate,
rate.
higher rate. That would be under these two sections, 206AB and corresponding section in TCS 206 CCA. So I would tell you who are all the persons, who would be covered under these two sections, who would be covered under these two sections, 206 AB as well as 206 CCA. I would tell you, my dear friends. So the point being, if you are making such interest per se, two sections we were discussing, 193 section, 194A section. So if you are making such interest payment to specified persons as mentioned in this section, 206 AB and CCA, instead of deducting it at this so-called 10% or 20%, you would be required to deduct it at double the rate,
20%.
double the rate, double the rate. Hope I am clear. Can I? So when these situations would occur, so instead of deducting 194A 10%, you would be obliged to deduct it at 20%, provided person who is receiving from you, the person who is receiving from you, if they are specified persons, then instead of deducting it at 10%, you would be required to deduct it at 20%. And I do hope you have went through section 194C. Have you? Contractual payments.
Yes.
Contractors.
Yes.
In case of contractors payment, it was 2%. 1% in case of individual and HUF sort of persons,
Yes.
and other than the same, it would be 2% instead, isn't it?
Yes.
But instead of deducting it at 1% and 2%, if you are making such payment to a specified person, then it should have been 5%. Why it is? Why? Because if you are making the payment, to a specified person, then instead of deducting it at normal rate, you would be required to deduct it at double the rate or 5%, whichever is higher. Double the rate of normal rate or 5%, whichever is higher. So in this case, I was mentioning 194A. 10% is the normal rate. 10% is double. 20% you would be required to deduct. But in case wherein it is 194C, it is 1%'s double would be 2% only. 2%'s double would be 4% only. There the limit is 5%. So here in this case, 194A, 10% is double, 20% or 5%, whichever is higher, the rate should have been 20%. But in case of 194C, 2% is double, 4%, or 5%, whichever is higher, 5% would be the rate of TDS. So this is how, in case of payment made to specified person, what person?
Specified person.
Specified person, the rate of TDS would be. Then, till now we were discussing specified person. Now I would be telling you who shall be a specified person. Who would be a specified person? Can I?
Yes, sir.
Yeah. Yes, sir.
Can I? Little
Yes,
more
sir.
voices I do expect. Can I?
Yes, sir.
Yes, sir.
Yes.
Yes.
So who is a specified person? Specified person is a person subject to two conditions. How many conditions?
Two conditions.
Two conditions. It's a negative condition. If they are satisfying those two negative conditions, then they would be a specified person. What are those two conditions? First condition, they haven't filed the income tax return. It is not TDS return.
Income
Deductee
tax
have not
return.
filed what? Deductee
Income
have not
tax
filed
In-
income tax returns. And time limit to file income tax return got expired, right?
Mm.
Then plus the total TDS, TCS of that person deducted or collected during that year is more than or
50,000.
equal to 50,000 rupees. How much rupees?
50,000.
50,000 rupees. So totally, I would tell you, you may have definitely heard the term 26 AS. Have you?
Yes, sir.
Yes, sir.
Yes, sir.
So what is that 26 AS? You know, 26 AS is the place wherein total TDS deducted, total TDS collected, TCS collected, it would be recorded. And if such amount in total, not only from a single deductor, all deductors during the previous year is more than how much rupees? 50,000 plus
1,000.
for that year, they haven't filed what? Return of
Income
income. The
tax
time
return.
limit also got expired. So in such cases, those persons would be termed as specified person. Which person?
Specified person.
Specified person.
Specified person.
Then if you are deducting TDS from those specified person, if you are collecting TCS from those specified person, the basic rate which is mentioned in respective sections would not be applicable. Rather, double the rate of normal TDS or 5%,
5%.
whichever is higher shall be
Higher.
applicable. Hope I am clear.
Yes, sir.
Crystal clear.
Sir, can you please repeat that 50,000 condition once again?
The point is, madam, in order to classify a deductee to be a specified person, two conditions, though it's a negative, I would be telling you two conditions to be satisfied. First condition, they haven't filed the return for the previous year and time limit expired. Plus, their total TDS TCS credit is more than 50,000. Then such persons shall be a specified person. Priya Kumari, madam, am I clear?
Yes, sir.
Say, I haven't filed the previous year return. You are giving me some amount of interest. But during that year, my total TDS TCS credit is only 10,000 rupees. How much it is?
10,000.
So whether I am a specified person?
No.
No.
No. Then whether 206 AB would be applicable?
No.
No. I haven't filed return under 139 and my TDS is more than 50,000 per se 70,000 and you are giving me amount of 1 lakh as interest. Then whether 10% would be the rate of TDS?
No.
No. It would be how much percent?
20%.
20%.
20% specified.
Why? Because I am a specified person.
Specified
Hope I
person.
am clear. Just for the sake of understanding, I am trying to elaborate it more. Any doubt, kindly do tell me. Quite an important section. Quite an important section. Why? Because.
Sir, Becky, practically it is very difficult to identify.
Yes. On to that point, Nishant sir, I am trying to tell you. Nishant Chaudhary sir, I would tell you how to identify and all, right?
Yes, sir.
Before which, definitely yes, I would be addressing that question, how to identify. Before which, let us give you more clarity on this section, 206 AB and double CA and consequences. Consequences, I was trying to tell you the consequences for non-deduction of TDS, isn't it? Hello?
Yes, sir.
What were the consequences for non-deduction of TDS? Disallowability was there, isn't it? Hello? Can you recall it back?
Yeah,
Yes.
disallowance of expenses.
30%,
Yes, sir.
100% disallowability were there. Apart from 30%, 100% disallowability, I was mentioning penalty. I was
Penalty.
mentioning penalty up to prosecution it can be, isn't it?
Yes.
Yes.
So I would tell you, my dear friends, the point is all the consequences for non-deduction would be applicable in case of short deduction of TDS too. Hope I am getting my point. Hope you are getting my point.
Yes, sir.
Yes.
So for short deduction of
Yes.
TDS, all the consequences for non-deduction would be applicable. So instead of deducting it at 5% or double the rate, if you had gone with the normal rate, are you getting me?
Mm.
Not by knowing that person to be specified person, if you went down to deduct it at normal rate, are you getting me?
Yes, sir.
Yes.
Then what would be applicable?
Short deduction.
Short deduction. If you are short deducting all the consequences, are you getting me?
Yes.
So that is the point that you have to digest first, absorb first. Otherwise, you would not appreciate these sections and relevance of this section. Draconian section, those two are. One is with regarding to TDS 206 AB. Next section is with regarding to TCS 206 CCA. So TCS also, while you are going, you would be getting through. Then on what are all the sections for this 206 AB is applicable apart from a few sections, say 192 salary, 192A provident fund payment, 194B double B lottery winnings etc. 194N, 194IA, 194M. So apart from those few sections, all other sections, this 206 AB and double CA would be applicable. So these two sections, the sections for the day, 193 as well as 194A. If you are making the payment to a specified person, then instead of 10% should be 20%. Instead of 20% it should be 40%. That is required to be deducted. Then as rightly mentioned by Nishant Chaudhary sir, he was asking how to identify whether they are specified persons, isn't it? Hello? He was
Yes,
asking.
sir. Yes, sir.
Yes. How to
Reporting
identify?
portal.
Reporting portal. Why? Because in earlier cases, it was quite difficult to identify them to be as a specified person. So earlier, you have to get the declaration from those persons, whether they are specified persons or not. In case wherein you are getting the declaration from them, there can be chances that first of all, they need not respond to you. You would not be getting any information from them to determine whether they are specified persons or not. Point number one. So even though you get some reply, you cannot relay it at all. They can give you a misstatement. If on the basis of that misstatement, if again you have not deducted it at the normal rate, then again there are reasons for you against you. The department can proceed you against short deduction of TDS. So in order to get away the deductors from those dilemmas, now the department comes up with an option reporting portal. Which portal? Hello?
It's reporting portal.
Reporting portal. I would show you, my dear friends, please. I'm trying to share the browser. Hope it is visible.
Yes, sir.
Yes.
Yes, sir.
Income tax insight.gov.in. Can you see this?
Yes, sir.
There, this reporting portal, using your TAN, you would be required to register. After registering with this, you would have your user ID and password. So I am trying to give already registered PAN with that of password. One second, please. I am trying to relog in. some issues there. Anyhow, if you are logging in, then within which you may have that option to check compliance procedure under section 206CC and AB as well as 206CCA, within which you may find how to do it, and in that way you can check. Now it is not getting inducted, it is
So
not getting
one
logged in.
doubt, I've tried it for individual pan. I mean, like pan for one pan or two pans individually. Whether we can do bulk pan cross verification can be done, or it's like well, you can do only one by one.
No, madam. The thing is actually in that if you have logged in, there is an option for bulk upload also. So at a time you can check for thousands of pan, and one by one pan you can also enter with. In both
Sure.
cases, you can get their status, whether they are specified persons or not. So there is no requirement to get one pan at a moment. If you are having thousands of entities, in those cases also, you can do it.
Okay, sir.
Hello. Yes.
Yes, sir.
I would try to get one more this thing. Let me 1 second, please. WP0.62. One second, please. I'm trying to log in again. I would show you if possible. 1 second, please. Maybe some errors in portal 2, which prevents me to log in. Let me try. No, it is not getting entered. Somehow or other, another time, definitely we would be trying to do it. So for the time being, the point is within that portal, you just presume you can get those details to check up whether they are a reporting entity or a specified person or not. If they are specified person, then if they are specified person, I was mentioning, instead of deducting it at the normal rate, you would be required to deduct it at higher rate or
5%.
yes, higher rate, double the rate or 5%, whichever is higher, you would be required to do it. Then one more thing, whether you have to check the status of those persons every time when you are trying to deduct.
No.
No. Then when it has to be checked, madam?
Every I mean, like once the return is filed, I mean, like after the due date, I mean, like before, maybe till the month of, I mean, like till the time due date extension is there, right? I mean, like before March.
The point is, madam, say in this year, say this is year 23-24, April you are making the payment. Are you
I'll
getting me?
start to
Hello?
check from like, yeah, I'll start to check if it is for individuals. I mean, like I will start to check it from now on. And
No,
if
madam.
it
The
is
thing is, even though it was planned to be so only, reality I would tell you. Okay. The point here is, for the sake of clarity of all only, I'm trying to tell you, in this web portal, even though it was not logged in, you just presume there is a column wherein you can enter the PAN of deductee. If you enter the PAN of deductee, then you can see whether they are specified person or not. Try to visualize this, please. So you are checking the deductee status, whether they are specified person or not. Then whether that exercise has to be done each and every time. Each and every time in the year, whether you have to, the answer is no. But partially yes. When it is no, I would tell you, kindly do try to understand this point. Kindly do try to listen to me. Listen to me carefully. The point being, if you are a non-specified person, then for the entire year, you would be a non-specified person only. But if you are a specified person, then once you file the return, then you would become a non-specified person. Meaning what? By checking that website, suppose you are having 50 deductees, 50 deductees. How many deductees, my dear friends? Hello?
50.
50 deductees.
50.
And you checked the status of all those 50 deductees and you found 45 deductees to be non-specified. How many deductees? 45 deductees.
45.
So the entire year, for the entire year from April to March, say on April 5th, you checked all those. And of April 5th, all the 45 deductees were non-specified. Non-specified meaning what? They have filed a return or their TDS, TCS credit is less than 50,000 even though they haven't submitted the return. In such cases, for all those 45, you need not check for the entire year. Hope you are getting me. Can I?
Yes, sir.
Yes. But for the remaining five, the question is whether they would be specified person entire year. Whether they would be
No.
specified
There's a
person
chance
entire
of
year. No, the case is they have got that option to file 139.8A updated return, isn't it?
yes.
You know the time limit to file the return. You know the time limit to file the return. The time limit to file the return under section 139(1), 31st of July, 30th of September, 30th of November. 139(4) belated return 31st of December. So after that 31st of December, this year April, you cannot file the return under section 139(1) or 139(4), normal return, timely return or belated return. Then you would be required to file the return under as an updated return 139(8A). And that situation, if it is not a refund return, loss return, definitely yes, they can file the return right now, isn't it? But the point is, before any point wherein you are trying to do for those 5 persons, unless they are becoming specified person and non-specified person, then you have to deduct it at higher rates. But once he have filed the return and within couple of weeks, the portal would update it and they would be showing it as non-specified person. Then for the that year, you need not deduct it at a higher rate. Normal rate of TDS can be deducted. So this is the point. This is the point. Point being, the point in nutshell being what? Once you have to check, once a specified person need not be specified person throughout the year. Every time you have to check unless he is becoming a non-specified person. But once non-specified person, entire year they would be what only? Non-specified person only. But as rightly mentioned by Abhirami madam, the point was the section says time limit under section 139(1). But this web portal, it is not working on the basis of 139(1). Rather, that year to year basis only it is working. So practically, once a
Okay.
non-specified person would be non-specified person after 139(1), you need not check it again for the time being. Are you getting me?
Yes, sir.
System shows only, so
Okay.
only. So this is what about section 206 AB as well as 206 CCA. Hope I am clear. Can I?
Yes, sir.
So
Yes,
apart
sir.
from a few sections, a handful of sections, say 192, 192A, 194B, 194BB, 194M, 194N, 194IA, IB. Apart from these sections, all other sections, you have to check. You have to check their specified person status. If only they are non-specified person, you can continue with the normal rates. Otherwise, you would be required to deduct it at higher the rate, double the rate of 5%, whichever is higher. So this is what about these two sections, 206 CCA as well as AB. CCA you would be discussing while discussing TCS sections. For the time being, I am not indulging onto this. Now, another section other than this 206 AB, you may have heard that section 206 AA. It is what it is.
Double A.
206
AA. So both these section series AB as well as AA as far as TDS is concerned, you may have to note it that apart from normal rate of TDS, these rates would be applicable. So what is this about this 206 AA? This is about, the person who is a deductee have to give PAN to the deductor, isn't it?
Yes.
Without giving PAN, what would be the issue?
Higher TDS rate should be deducted.
Higher TDS rate it is there, madam. Apart from there,
20.
apart from that, what would be the basic issue? The basic issue is without PAN,
But-
that amount would not be reflected in deductees 26 AS, isn't
Yes.
it? They won't get the credit.
Yes.
Yes.
But there are, isn't it? That is a fundamental issue. If you are not giving the PAN or if the wrong PAN is being given at the time of filing the return, then you won't get the due credit, isn't it?
Yes.
So apart from which there are certain persons, they would not file the return, they would not give the PAN for the reason they are ready to pay that 5%, 10%, 1%, 2%, isn't it? So that they can be escaped by filing, non-filing of return, everything it can be. So just to catch them who are not giving the PAN, who are not filing the return for those cases, in order to capture the information only, all these TDS sections are being inserted by the government. So there are various purposes for those TDS. First thing is easy revenue collection. Second thing is gathering various information. Who are getting those things and all, the government should get. That's why these two new sections 194Q, 206C, 1H, etc. are being there on sales and purchases. Only the rate of TDS and TCS is 0.1% only. 0.1% only. So it is not the revenue concern which the government is trying to do. No screen is shared, sir. No screen is shared. I'm just telling you. No screen. Just I am telling you. Nothing more from this PPT right now. Why? Because 193, 194A, both sections just for covering the same I was. Now, so the point is, government have introduced these sections TDS and TCS to accumulate the information. So there were certain persons without giving PAN, even though the rate of TDS is not, the amount of TDS is not getting credited. They were doing all those things to get away from the sight of income tax department. To catch them only, 206 AA was introduced. Which was introduced? 206 AA. 206 AA. So those persons who have not submitted this PAN, those persons who have not submitted the PAN to deductor, instead of deducting the TDS, it should be 20%, 20%, 20%, or actual the rate, whichever is higher, shall have to be deducted under 206 AA. Now there is a development in that section 206 AA. Why? Because you know the last date for linking PAN and Aadhaar is over, isn't it? Hello.
Yes, sir.
Hope you all have linked your Aadhaar with the PAN. Can I?
Yes, sir.
Yes,
If
sir.
PAN is not linked with Aadhaar, what would happen?
The PAN will be inoperative.
PAN would be
deactivated.
inoperative. PAN would be inoperative, isn't it? So in
Yes.
such cases, the point that I want to mention you is, even though the deductees have given you the PAN, you as a deductor, are you getting me? Hello?
Yes, sir.
But for the reason,
Yes, sir.
if their PAN is not linked with Aadhaar, that PAN would be deactivated, inoperative, isn't it?
Yes, sir.
Yes.
That situation also would tantamount to 206 AA for the reason PAN is not there. Even though PAN is there, PAN is not there. Can you appreciate the point?
Yes, sir.
Yes.
Even though the directive have given you with what, sir? Even though the directive have given you the PAN, and
PAN.
suppose the PAN has not been linked with Aadhaar, the PAN would be invalidated. It would be par equal to no PAN has been submitted. Clear?
Yes, sir.
Yes.
In that case, what would be applicable? 206 AA would be applicable. Hope I am clear.
Yes, sir.
How
Yes,
to
sir.
check
Sir,
this also?
uh,
How to check this also? In that reporting portal, both purpose of 206 AB as well as AA would be applicable. Would be check the specified person status. Also, you can check whether the PAN has been linked with Aadhaar also in that web portal. Are you getting me?
okay, sir.
So both checking under 206 AA as well as AB CCA can be done. With that reporting portal. Unfortunately, we couldn't. Unfortunately, we couldn't get onto it. Definitely, yes. Somehow or other, another time, definitely we would can. I do hope at that moment we can do it. So for the time being, let us presume that by entering onto the same, you can get on to check whether they are specified person under section 206 AB, plus you can check 206 AA is applicable for the reason the PAN is not linked with Aadhaar. If any, it would be shown as inoperative. So 206 AA would be applicable. In that way, reporting portal would sort out. These are all about higher rate of TDS, higher rate of TCS, 206 AB and AA for TDS, CCA for TCS. Hope I was clear. Can I?
Yes,
sir.
sir.
Yes. So how to create the challan? How to make the payment? Everything, it was NSDL website. Outside the web portal, you have to make it before a peculiar time. But now within the income tax website itself, you are having two login IDs. With PAN, you have to have income
And
tax
PAN.
individual income tax PAN password you would be having. Income tax PAN plus TDS password. Then as a tax deductor also you can have the web portal, same web portal. Same user
Yes.
ID, you can have what? Two passwords for your income tax purposes and your TDS purposes. For your TDS purposes, you can create a user ID password within which you have to log in, and within that web portal, you have to make the e-payment now. Earlier, it was through some other portals. You have to make it. But you know now, in practical classes of TDS, you would be knowing how to make the payment and all. So within the web portal, you can make the payment. And I was mentioning you have to make the payment within 7 days next month, isn't it? 7th of next month, you have to make the payment. Only in case of March, April the 30th. Apart from which, you can download those tax preparation utilities, TPUs, isn't it? Using the tax preparation utility, you can
Yes, sir.
24Q, 26Q, 27Q, 27EQ forms are there. You can create those files, and those files zip form can have to be uploaded in the income tax website itself. Return submission on quarterly basis. And after submitting the return, you have to download the acknowledgements. Form 16, Form 16A and all. That has to be duly distributed to the directors. At the time of processing, any faults found, that also would be done in your inboxes. You have to find it. In case of anything to be revised, you have to download those consolidated file. That has to be revised. These are all the fundamental procedures. Those things definitely, yes, you would be having some sessions, lectures in order to appreciate those practical compliances for payment of taxes, for submission of returns, revision of returns, downloading those forms and all. So these are all the procedure. I'm not indulging onto this. So any doubts with regarding to 193, 194A or anything with regarding to 206AB, double CA, double A, you may ask 20 minutes more. You may feel free to ask any questions related to TDS also. Now the floor is open to you all. Please. Hope you understand those two sections, 193, 194A. Can I?
Yes, sir.
Yes, sir.
Difference between and similarities between those two sections. Rate of TDS, who has to, whom has to. Then some situations, cases also I was still trying to tell. Apart from which, higher rate of TDS also we were trying to understand. Any doubts, you may feel free to ask. Otherwise, let us call off for the day. Nothing from your side I do understand. Can we stop then?
Yes, sir.
Okay, so thank you all for your patient listening. Thank you very much.
Thank you, sir.
So I would be sharing those PPTs. Kindly to try to have those
Thank you, sir.
practical these things. Try to utilize the opportunities. Why? Because 20 minutes were there. The faculties would be available. So kindly to try to utilize. Please. If you have
Yes.
questions, you ask, then you would be getting those answers. So nice of you. Have a nice Sunday. Enjoy. Bye bye.
Thank
Thank
you,
you.
sir.
Please.
Thank you.
Thank you, sir.